The $60 trillion are about to become available and can be used to buy digital goods. It's not a mistake. $60 million accounts for retirement, funds for sovereign wealth, giveaways. All of them are waiting on the sidelines and have no money allocated to crypto right now. And when even a small amount of that money hits XRP, it does more than just change prices. There will be a huge increase in money, and XRP could reach 3 or even 4 figures. This is not advice about money. Let us break this down. Around $60 trillion is held in retirement funds around the world. As of now, those accounts are not exposed to crypto. None. But let's look at the math. The price of Bitcoin goes up by about $30,000 for every percent of that $60 trillion that is put into it. That means even a conservative 2% investment could drive Bitcoin north of $175,000. That's really big. Now think about what will happen when the same amount of money is put into XRP, an asset designed for speed, scale, and global payment. This is where things get crazy. The flat math shows that XRP would be worth about $12.96 if just 1% of $60 trillion, or about $600 billion, was put into it directly. Things don't just move on flat numbers, though. There isn't much XRP available compared to the trillions that are coming in. New money coming in has a multiplying effect, and if you look at the possibility with a 25x, 50x, or even 100x multiplier, you can see that XRP could be worth $250, $500, or even $1,000. That's not just a guess. While you still can, get it, because it's the kind of tool that could totally change how you look for chances. Also, don't forget to get your free NVDA stocks worth up to $1,000 when you use my link below to make a $100 payment on Moomoo. There are 2 of the most useful things you'll ever get ready for you right now. Now let's talk about XRP and why we're still so early. Let's look at what the biggest traders are saying. The CEO of eToro said that 95% of their clients were trading Bitcoin and XRP in 2017 when crypto finally started to get interesting. These clients weren't trading Litecoin or any other random meme coin. They were trading Bitcoin and XRP. For them, these are still just wrong rounding. But when the biggest institutions start giving out money, the others do too. It starts a chain reaction. If you're a fund manager and your rivals are making more money with digital assets than you are, you have to follow suit or fall behind. This is where XRP really shines. Bitcoin has problems with centralization because miners control more than half of the network. XRP, on the other hand, doesn't depend on mining at all. There is no proof of work that uses a lot of energy, and there is no huge risk of centralization when 2 or 3 companies merge. XRP goes with agreement, transactions are completed in 3 to 5 seconds, and there are almost no fees. Banks can also run validators to make sure that the rules are followed. That's why businesses like it. It can be expanded, can be checked, and can work quickly as needed in global banking. Take a look at this. Big banks see XRP as built for the next system, not just as a way to keep value. It is being said out loud now. Recently, one of the most prestigious asset managers in the world, Franklin Templeton's CEO, was asked about banks' move into digital assets. He said that this is because digital assets are the new infrastructure. She made it clear that not all cryptos are the same. What 4 ETFs has Franklin Templeton put in for? You can use Bitcoin, Ethereum, Solana, and XRP. That's it. From a lot of coins, they picked those 4. And she talks about Bitcoin because that's what people know when she talks about tokenization, atomic settlement, and smart contracts. But people who know about technology can tell that she's talking about what XRP does. Bitcoin is not used by banks to send money across borders. On Bitcoin, they're not making stable coins. In that place, they are not making tokenized properties. They are looking at the XRP system and other networks like it that have compliance tools built in. Majority rule is important in this case. The New York Stock Exchange is closed for business today at 4 p.m. Why? To match up deals. But blockchain makes it possible for payment to happen right away. No need to wait, do things in batches, or worry about partner risk. In back office consolidation, that saves trillions of dollars every year, and it makes markets safer and more open. When AI tracking is added, regulators can see what's going on in real time. It gets harder to hide things like fraud, game playing, and shady deals done behind closed doors. This is why regulators will finally agree with this change. They become more open. They are able to run their own validators. They can keep an eye on deals at all times. These tools will help them stop theft at its source so they won't have to look for it years after the fact. It's a combination of speed, safety, and control. and XRP is the key to all of this. This is also another reason why support for regulating crypto is growing across the aisle in Congress. Senator Cynthia Lummis has stated that the bill to set up a crypto market is on track to be sent to the president. It doesn't matter if that's late 2025 or early 2026. The direction is clear. It will be clear soon. This bill will make it clear which assets are controlled by the SEC and which are controlled by the CFTC. Once that fear is gone, institutions will be able to safely put billions of dollars into assets like XRP. That's when scientists think it will happen. The SEC and CFTC will have between a few months and a year to finish making rules after the bill is passed. It might go faster if they are ready, but the real effect will happen right away. The mood in the market will change. Assets like XRP, which were always afraid of how the SEC would classify them, will now be able to operate freely. That by itself can cause prices to go up. Now look at what Ripple just did. They are now a founding member of the TRM Labs Beacon Network, which is the first method for responding to crypto crimes in real time. This links crypto companies with the police so that illegal behavior can be stopped quickly. Why is this important? Because one of the main things lawmakers don't like about crypto is that it makes scams and money laundering easier. Ripple is taking this problem head on and showing regulators that XRP is a safe ecosystem while also protecting its image. That means two things. First, banks will feel safer using XRP to send big amounts of money. Second, there will be less reason for regulators to slow down usage. There are also trillions of dollars sitting in retirement accounts, sovereign funds, and institutional treasuries. This makes the price of XRP stand out from everything else on the market right now. Don't forget that math is always right. By itself, just 1% of $60 trillion or 600 billion could send XRP well into the double digits. With a 50x increase, each XRP is worth $500. At 100x, there are 1,000 XRP and a market cap of $60 trillion. It's easy to see that XRP is placed exactly where the future financial system will go when you look at the chessboard from a distance. The assets are turned into tokens, atomic settlement happens, smart contracts are used, instant reconciliation happens, and compliance is built right into the record. This isn't just theory, it's taking place already. Think about how the people in charge of Ripple often talk about cutting costs. Cross-border payments are a $156 trillion market every year. At the moment, banks and other institutions spend billions of dollars just to match up data, deal with payment delays, and pay fees to middlemen like correspondent banks. The system is too big, doesn't work well, and is out of date. All of that is taken away by Ripple and the XRP database. Imagine being able to cut those costs by even a small amount. There are too many reasons for banks and businesses not to accept. This is where Ripple has been building slowly. Ripple has worked on solving real problems on a large scale, while other crypto projects follow short-term trends and hype. They have teamed up with hundreds of banks, payment providers, and other banking institutions around the world. It's not like these Asian banks like American Express or Tranglo or Santander or SBI. When these billion-dollar companies try, integrate, and sometimes already use RippleNet and XRP to make payments, it means that the technology works. But as we saw, that 2023 decision made it clear that XRP is not a security when it is sold on platforms. One of the full market structure bills was already taken away by that one ruling. After the Clarity Act is passed into law and the CFTC and SEC finish making rules, everyone will know where XRP stands. That's when the real floods start to open, because a lot of banks already want to use XRP right now. They can't take the risk of being regulated. They don't want to open themselves up to being accused of helping with an illegal security deal. But they'll move quickly once the doubt goes away. Check out the timeline. If the bill passes in late 2025 or early 2026 and it takes the agency 6 to 12 months to finish making rules, the environment will be totally different by 2026 or 2027. That fits right in with the rising demand for cheaper and faster payments around the world. Reports from the IMF, the World Bank, and the BIS all say that cross-border payments need to change. Even though SWIFT is trying to change, it still needs partner banking to work. Ripple is ready to go with blockchain payments right now. CBDCs are another important point. In more than 100 countries, digital currencies backed by central banks are being made. A lot of central banks want their CBDC to be able to work with other systems. In the past, Ripple has worked with the Digital Pound Foundation, the Digital Euro Association, and central banks that are looking into CBDC trials. The XRP ledger can tokenize any asset and settle quickly across borders. This makes it the ideal currency for CBDCs. Now think about this situation. 2% of the funds in retirement accounts are put into crypto. That amounts to $1.2 trillion. It's hundreds of billions of dollars, even if only a small part of that goes into XRP. It would be great to have national wealth funds like Norway's $2 trillion fund and big asset managers like BlackRock and Franklin Templeton file ETFs as well. Things are getting better. Don't forget that these organizations don't chase meme coins for speculation's sake. They put money into assets that are really useful and have working networks. XRP is perfect in every way. We need to talk about liquidity again because it is so important. The most XRP that can be made is 100 billion tokens. About half of it is already being used. Prices don't move in a straight line. When demand of hundreds of billions of dollars meets a supply of few goods, they go off. That's why $600 billion coming in doesn't just mean 12 XRP. The numbers get bigger and bigger because of the multiplier effects of low liquidity. That's how you get $255, $500, and 1,000 XRP. Think about what the CEO of Franklin Templeton said again. In her talk, she talked about how blockchain gets rid of counterparty risk, atomic payment, and middlemen. Those are the exact problems that XRP is meant to fix. At one point, she even said that officials would love blockchain once they saw how much it made things clear. No one is guessing at that. In that video, the CEO of a $1 trillion asset manager talks to the future. Franklin Templeton doesn't just talk. That should tell you everything you need to know about their application for an XRP ETF. Meanwhile, Ripple is still the leader when it comes to accountability. Ripple has joined the TRM Labs Beacon network to work with the police to fight scams and fraud in real time. This is a great placement. Regulators can't say that Ripple makes it easier for illegal money to flow when Ripple is actually making tools to stop it. That makes businesses and governments even more sure that they can use XRP on a large scale. Let's connect this to numbers in the real world. If the $60 trillion in retirement savings start to flow, even if they only invest 1% to 2%, that will cause a huge demand for crypto. Bitcoin will take some in, Ethereum will too, but XRP could be one of the biggest winners because it will be the link between banks and consumers. Remember that we're no longer talking about store speculation. We're talking about banks, pension funds, national wealth funds, and insurance companies putting money to work. Huge amounts of people want it more than anything else we've seen in crypto. Also, don't forget how the Clarity Act made people feel. As soon as laws get rid of formal uncertainty, people's feelings will change overnight. Imagine that every news story said that XRP was legally classified as CFTC property. All of a sudden, every organization that had been on the sidelines for years can move forward. That kind of event doesn't just make a price double, it changes the whole picture. Allow us to go global now. Japan's SBI Holdings has been a strong partner of Ripple for a long time. SBI has said in public that they want to use XRP all over their business. Asian company Tranglo is growing RippleNet to include more Asian countries with a lot of money transfers. Ripple works with state banks in the Middle East that are looking into CBDCs. Cross-border payments that are faster and cheaper could change whole economies in Africa. The world use case is very big. At the same time, Ripple is adding features that regulators want, like compliance and openness. That two-pronged method, which solves big problems while also making regulators happy, is what makes XRP stand out. One or the other is what most crypto projects are all about. Ripple can do both. This is why governments, banks, and wealth managers are interested. Even doubters agree that the shift is going to happen. Settlement, tokenization, and asset management will all be done with blockchain instead of old methods. The only question now is, which networks will be the most popular? As for XRP, it has been quietly setting itself up as the best bridge exchange for more than 10 years. That's why it's not a dream that XRP will reach $250, $500, or $1,000. It makes sense when trillions of dollars and a limited quantity meet on a network made for the whole world. It could not be a better time. Regulations are coming together, institutional adoption is speeding up, and Ripple is still adding more partners around the world. This is the reason why the XRP community is so excited right now. You can't just guess that the numbers will go up. It's the knowledge that we have a piece of the financial machinery of the future. Every move regulators make, every ETF filing, and every partnership statement makes it more clear. Also, it's still early. Institutions are just starting to get involved. It's just a rounding mistake that sovereign wealth funds are making. There is still no money in retirement savings, but things are getting ready for a flood of cash right now, and it won't flood in when it moves. It's going to flood. The rise of tokenization will be one of the biggest things that will help XRP as usage speeds up. The time has come when stocks, bonds, real estate, and commodities will all live on blockchain. Analysts think that by 2030, tokenized assets could be worth more than $16 trillion. What do you need to move all of those things across countries quickly and easily? A balanced, easy-to-sell bridge asset. That's where XRP really shines. Think about how settlement works now. There are stacks of managers, clearinghouses, and correspondent banks that you go through when moving bonds between institutions in different countries. Each one has fees, delays, and the chance of dealing with a different party. Blockchain gets rid of those steps. XRP can settle instantly around the world with no middlemen. That level of efficiency changes the way banking is done. Not only does it save money, it's not just an idea either. Ripple has already worked with banks, states, and central banks in a number of different areas. They've tried CBDCs and done pilots to show how on-demand liquidity powered by XRP can cut costs by a huge amount. As soon as the government gives the go-ahead, these pilot projects can become full-scale production quickly. This is why the time frame is important. Between 2026 and 2027, when regulations become clear and institutions are forced to update their systems, XRP will already have a decade of growth, relationships, and use cases that have been proven to work. Ripple may be able to win, even though other groups are trying hard to catch up. We should also not forget about the multiplier effect. You know that new money coming into markets moves them quickly if you've seen how crypto prices change when there isn't much money available. XRP isn't just a token for speculation, it's also used for payment. When $20 billion are at stake, they are not spread out among 20,000 pieces. They are put into the few assets that were made just for the job. That has a much bigger effect on the price than the amount of money coming in. Think about the news stories that will follow. The Crypto Clarity Act is passed by Congress. Institutions are free to distribute. At the top, the XRP ETF was accepted. RippleNet is now used for payments between banks around the world. All of those things could start a rise on their own. They made it possible for XRP's value to rise again, which could shock everyone. This is why a lot of long-term users are still sure. As soon as the pieces are in place, they can see which way the motion is going and how quickly it can change. The story of XRP isn't about hype, it's about what was bound to happen. The finances are being fixed up. Capital worth trillions of dollars is moving. Also, the world needs a payment layer that is quick, liquid, open to audit, and able to grow. That's XRP. So the way there isn't just what if, whether it's $255, $500, or even $1,000 per coin.